Welcome to Richard Suttmeyer's 4 in 4. 4 blips on my radar screen presented in 4 minutes or less. Today is Tech Tuesday, so my first 2 blips cover technology. I must also continued coverage of the financials. My first blip looks at the daily charts for the tech-heavy NASDAQ and Philadelphia Semiconductor Index, the SOX. The NASDAQ closed Monday above its 50-day simple moving average at 2316, the first such close of the year. This puts the February 1st high of 2419 as the upside potential. The SOX also closed Monday above its 50-day simple moving average at 352.74, the first such close since October 18th. The upside is to the February high at 380. My second blip looks at the oversold rallies for Apple and Google. Both Apple and Google have gone from being overvalued and overbought in October to undervalued and oversold in March. The weekly chart for Apple still shows an oversold condition and a weekly close above the 5-week modified moving average at 134.91 targets my quarterly risky level at 150.88. The weekly chart for Google still shows an oversold condition and the 5-week modified moving average at 486.10 lines up with chart resistance at 485.74. My third blip looks at the regional banking index, BKX, which is 17.7% off its 52-week low set a week ago at 73.22. The BKX represents 24 regional banks, including Bank of America, Citigroup, JP Morgan, and Wachovia. The BTX is above its 50-day simple moving average at 84.84, with the year-to-date high at 96.49 and the 200-day simple moving average at 98.77. At the lows, the BKX traded at levels not seen since April 2003, before most of the problem mortgages were originated. My fourth blip profiles the 4 major components of the BKX, which have likely rallied too far too fast. Bank of America is just below its fair value at 44.26, and its year-to-date high is 45.08. 12-month trailing EPS at $3 and 12-month forward EPS from Wall Street is $3.95. Fair value is way too optimistic, as forward EPS could be 0 given the fourth quarter drop in net income of 95% and the talk of another $6.5 billion in write-downs. Citigroup is rated to sell according to Value Engine with fair value at 24.56. Its range is 17.20 to 26, and its 12-month forward EPS is an aggressive $2.51. JP Morgan is above fair value at 46.05 and just below its year-to-date high of 49.29. With 91.7 trillion in notional amount of derivative contracts, write-downs loom. Wachovia has a fair value of 42.22, which is way overstated given 12-month forward EPS at $3.29, a fourth quarter drop of 98% in net income, and time bombs ticking with regard to negative amortization mortgages on the books of Golden West. I do not think financials have bottomed, and they are near the upper end of trading ranges. Send your comments and questions to support at rightsideadvisors.com. That's today's 4 in 4. Enjoy your day.